In this episode, we're going to talk about the US elections, the dollar index, and the USD JPY carry trade. My name is Samson Mzera, and welcome to this episode of the Market Watch series, where we talk to you about the markets, the news, what's happening, and what to expect. So remember to like, subscribe, and share for more. The impact of the US election season is now becoming more apparent in the markets. Joe Biden last Sunday stepped down from the presidential race and further endorsed Kamala Harris as the presidential nominee. In most polls, however, Trump is still leading and the Democrats have an uphill task ahead of them. Now, how is this being priced in the markets? The markets are starting to price a Trump presidency based on these polls. Now, what would a Trump presidency look like? And this is where prices are reacting the most. First off, Trump is pro-corporate, and that means we'll expect policies like cutting taxes and easing the regulatory environment. We also expect that because of this pro-corporate nature, Trump will want the US exports to be more competitive in the global economy. And this means attempting to weaken the dollar, or at least having policies that ensure this. And this now brings us to the dollar index as we're seeing it. The increased expectation of a Trump presidency, coupled by the fact that we do expect the Fed to start cutting next year, are signs or indicators leading or pointing towards a weaker dollar. And this is what the market is starting to price in the long run. But Biden stepped down on Sunday. However, on Friday, the previous Friday, we had the dollar having quite a huge gain in the markets. So what happened then? CrowdStrike, a cybersecurity firm, ran an update, and this update caused an outage in the global IT infrastructure and systems. Microsoft, for example, claims 8.5 million computers were affected. And now this is not just any outage, because now systems such as bank systems, airports, and supermarkets were all affected. However, on the mark end of things, it seemed pretty okay. Now, because of this system-wide outage, it spooked the market, and therefore there was a run to safe haven assets such as the dollar. And this is what caused an increase in the prices for the DXY. So while there was a retracement in the DXY from the current trajectory, we need clear confirmation of prices moving past this level to confirm that indeed the DXY is starting to gain momentum. However, the long-term thesis still stands of a weakening dollar in the long run. Now, when you look at other charts, the Euro USD pair was down, GBP USD was down, and XAU USD was down. Traders will be focusing on key supply levels as this retracement continues. We have no clear confirmation of a change of market structure at the moment, so we'll be waiting for prices to approach key supply levels or key price levels before we make any conclusion that the trend has changed. Otherwise, the long-term trend in the markets and the long-term thesis fundamentally still stands that we do expect a continuation of this trend based on the factors that we've discussed earlier. On all these pairs, one pair is standing out, which is the USD JPY chart, and that is the chart of the day today. So we have been moving downwards because of three key fundamental factors that make it the perfect combination for a continuation of this trend. First is on the BOJ side of things, where the market is expecting and increasingly expecting that we might start hiking soon. Remember, hikes in the BOJ will now certainly make the yen stronger. Next, we have seen interventions in the market. So the BOJ is one bank that is notorious for making FX interventions, and there are still prospects that we might have more interventions in the future. So this, first off, is making the Japanese yen seem like it's going to start strengthening at the moment. Now, coupled by the fact that we are expecting the dollar to weaken because of, number one, a Trump presidency, and number two, the Fed cuts, then this provides the perfect opportunity for a lot of traders for a carry trade, in which the interest rate differential between what you expect with the BOJ and what you expect with the Fed is going to have a huge factor in determining the long-term direction of the USD JPY pair. And in this case, that downtrend might be the result of those expectations being priced in the market. So what are we going to look at in this case? We're going to try and see any significant pullbacks into key levels where we look for continuations in the general direction of the trend. So unless the rhetoric of the BOJ has changed, we do expect a continuation of this trend for the foreseeable coming days. In other news, we're also expecting the Canadian CPI coming in this week, and we'll be keeping you in the loop to see what transpires and how it's going to play out in the markets. Having said that, thank you for tuning in, and see you all in the next one.